Hey, it's Joe Vonderschmidt with Century 21 Results Go with Joe and Co. And I'm here for another live episode of A Cup of Joe live every Wednesday morning at 8 a.m. on Facebook, Instagram, and YouTube. Really appreciate you guys being here again with us this morning. And I'm very excited about today's episode. We've got a special guest, Jonah Abraham, my preferred lender with Homestar Financial. Many of you guys have probably know Jonah or have worked with Jonah, so I'm very excited to have him on today. Once again, if you guys have any questions throughout this live episode, feel free to comment, or even if you're watching on replay, be sure to comment your questions and we will make sure to get them answered. Today we are going to be talking about the mortgage process and the do's and don'ts of the mortgage process, which I think goes perfectly with what we talked about last week, the importance of mortgage pre-approval. So like I said, we've got Jonah here with us today. And just to recap what we always say, if you would like a cup of Joe coffee mug, would be more than happy to get one to you, or even a t-shirt. And if you guys have any questions, please be sure to comment. And again, let me know that you're here watching, because I can't see that you're watching unless you comment. So thank you guys for being here. Jonah, let's get started again talking about the mortgage pre-approval, or not the mortgage pre-approval process, but the do's and don'ts of the mortgage process. What would you say are some things you want to be sure of when getting started in the mortgage process?
Yeah, guys. So happy Wednesday. Happy to be here. Thanks for having me, Joe. So I think the number one thing that I would look for when I'm starting the mortgage process is find someone that you know that you can trust, that you like to work with. You don't want to be miserable during the process, because you're going to have to be talking to your lender a lot. You're going to have to be, working with him. You're going to have to be on the phone a lot. And, there's a lot of questions that come up. So you don't want to be with someone that you're uncomfortable with. So the number one thing is just find someone that you're comfortable working with and then go from there.
That's a great point. And that's something that I talked about a little bit last week is finding somebody that is going to be a good fit for you, because like you mentioned, you're going to be on the phone with them constantly.
Oh, yeah.
So I know my preference, I mentioned last week, is using local lenders like yourself,
Yep.
That are paid on commission, that have some incentive to get a deal to the closing table. Whereas you see a lot of larger banks that are just work those 9 to 5 hours. If it's after 5 p.m., you're not going to get them on the phone.
Or on the weekend. Yeah,
exactly.
Yeah. So, definitely a very important thing is to have a lender that has a good relationship with your realtor, because if he doesn't have a good relationship with your realtor, then they're not going to, they're going to clash and they're not going to work well together. And that's super important, because having that relationship helps you guys have a better experience as a home buyer, and it just makes everything go smoother.
Yeah.
Yep.
Awesome. So, other things.
Yeah. So I would say, on top of having someone that is easy to work with, make sure that you shop around a little bit. You don't want to shop around after you've started, after you've gone under contract. That's not the time to shop around, because at that point, time is of the essence. You can't take your time. You can't shop around, all that stuff. You need to get your appraisal ordered, your title work ordered. All that stuff needs to be in place by the time you go under contract, especially in today's market. Everything's moving super fast paced, and you don't have time to do that. So if you want to do shopping around, do that during the pre-approval process. You can call around, ask different lenders what their rates look like. You're not going to be able to lock anything in until after you have a contract on a house, but you can at least get an idea of what their rates look like. And you can just see, what it's like working with them, because if they don't answer the phone when you're calling about getting rates or whatever, then they're probably not going to answer the phone after you're under contract. So it's definitely important to do that. And just remember that rates and numbers are not everything. It's all, in my opinion, during the mortgage process, service is a huge key. You don't want to be, just worried about, because you could go online, you can get a quote from Rocket Mortgage or something like that and get the lowest rate you can see online, but that deal may never close. They may never be able to get your contract closed. And so that's super important to remember. And one thing that I would say to remember is just make sure that you, ask questions that you may feel like you don't understand. Ask those questions up front. Don't wait until you're under contract. Don't hide the questions. Make sure you ask those questions.
Yeah, no, that's a great point. So you said that, it's not all about the rate, which is true. I mean, rate is obviously very important. That's going to affect your payment. However, you see a lot of companies out there that will throw around super low rates, draw your business in up front, and then they can't necessarily deliver on what they're saying that they can do.
At the end of the day, anybody can tell you any rate they want on the front end. They don't have to, because they're not giving you a loan estimate up front. All they have to give you is an itemized fee sheet. Mm-hmm. They don't have to be honest about what the rate's going to cost. They don't have to be honest about anything, really. So you need to be careful about that, because they'll do that just to trap your business. And then you'll get 2 weeks from the closing table, your closing disclosure goes out and everything's changed.
Right.
So that's something to watch out for as well. But yeah, just shop around, make sure you're comfortable working with someone, and make sure your numbers look like you want them to.
Yeah. And guys, I just wanted to say I appreciate you all being here. Please be sure to comment. Let me know that you are here watching. I can't see that you're watching. Any questions that you have, be sure to put them in the comments section, and we will be sure to get them answered. Even if you're watching on replay, we'll circle back around to you after the show. But next thing, let's see. The mortgage process, I say it all the time, that's the most important part of the home buying process.
Oh, yeah.
So who your lender, who you work with matters.
Yeah.
But also, making sure that everything's getting done in a timely manner is also super important.
It's also, I've worked with some people that understand that, but a lot of first-time home buyers don't understand that how time-sensitive everything is during the mortgage process. So during the process, you have probably 13 or 15 people that touch the file from start to finish. So there's a lot of different things that have to get done, and there's a lot of things that have to be done on a timely manner in order to get your loan to the closing table.
I feel like a lot of people see, my closing's not for 30 days or 45 days, and I feel like they can take their time on getting the documents into their lender, when in reality that's the reason why it takes 30, 45 days to close on a house, is because the mortgage process.
Yeah, the mortgage process. So the underwriting portion probably takes maybe 2 weeks. Mm-hmm. But the biggest thing right now is appraisals are taking a while, just because there's so much business going on and there's only so many appraisers. So they're all kind of backed up trying to get things done. And then also your title work is taking a while. Your courthouses are still kind of under COVID, guidelines and stuff like that. So you can't go in and get your title work as fast as you could before. So all those type of things are slowing down the process a little bit, but we're still able to close contracts in 20-ish days if everybody's on top of their game. If your client is saying, all right, let's I got my stuff. Here's all the documents you requested, and then we can turn them back into the underwriter and get the loan approved.
Gotcha. Looks like we've got Jonathan Kingery on board, another great realtor in the area, and Susan Roby, one of our past clients.
Hey, Susan.
Yeah, Susan's here watching. So, Susan, thanks for being here. So one thing that's important, when you're doing the pre-approval up front, before you're doing your application, before you do a credit check, it's pretty important to be honest about things up front, because it's going to come out eventually, right?
Yeah. So the underwriter is going to dig into everything that they need to see about your finances. So if there's something that you didn't tell me up front, it's probably going to get uncovered during the process, and you don't want that to happen 2 weeks before closing. You want that to happen in the pre-approval process. That way everything is laid out. We know exactly what the story looks like, and we know that we're going to be able to close the file. But there's things that can come up that can completely ruin the whole thing, and you may not be able to get the mortgage if you weren't honest up front.
Yeah, that's a great point. Yep. Okay, so we've talked about a couple of things that you want to make sure of. So make sure you work with somebody that you like. Make sure that you ask questions. Make sure that you're honest about everything. And make sure you're working with somebody that you feel confident can get the deal done, right?
Yep.
Okay, so what are some things that you definitely want to be sure that you don't do, some don'ts of the mortgage process, because obviously that can really mess things up?
Yeah. So one of the biggest things that you don't want to do is you don't want to open a new line of credit during the mortgage process. So basically what happens is during the pre-approval process, we look at everything on your credit. We put that all against your income, and we create your debt to income ratio. And so if that goes up and it goes over a certain percentage on different loan programs, then you can no longer be approved for the loan without either getting rid of the debt or paying it off, or in some way getting rid of the debt. So if you open new credit during the mortgage process, the underwriter, pretty much every time she re-underwrites the file, so when you turn it back into the underwriter, they underwrite the file again. They're going to do what's called a credit refresh. So they're going to pull a soft pull on your credit, make sure there's no new inquiries. And if anything new pops up, we have to explain what that is. We have to get the payments on it and all that stuff. We have to add that to your debt to income ratio. So you don't want to do that, at least not without talking to your lender. Now, if it's something that has to be done, say there's furniture that you have to get for the house or something like that, you can do it, but make sure you consult with your lender first and make sure it's in a good time advance before closing. You definitely don't want to do it the day before closing, because they do a credit refresh literally the day before closing, and that can really.
No, these are great points. In my opinion, this section of the of this episode is going to be the most important, the don'ts of the mortgage process. So if you guys have any questions, just want to remind you to comment your questions. Be sure to comment. We'll be sure to answer them. Even if it's after the show and you're watching on the replay, we'll be sure to get your questions answered. And please be sure to comment. Let us know that you're here watching. I can't see that you're watching unless you comment. So please be sure to comment. Let us know you're here. Say good morning to us, and we appreciate you guys being here. Looks like Jonathan has a question for us. Once you get pre-approved for a mortgage, how long is that pre-approval good for?
So pre-approval is technically good for 90 days because that's how long your credit report is good for. So 90 days, once 90 days is up, all you have to do is call your lender, say, hey, can I refresh my pre-approval? We'll just pull a new credit report and make sure nothing has changed. Mm-hmm. If anything has changed, we'll adjust the numbers accordingly.
Okay.
Yep.
That's good stuff. So again, circling back to around what we were just talking about, though, is you don't want to open any new lines of credit. So what you see a lot of people doing is maybe they get a little bit too excited about their new home purchase, start buying furniture, but the issue is they do it on credit. So they open up a new credit line to be able to finance their furniture. It's definitely something you don't want to do. So that goes for any new lines of credit. If you see that your cash to close is going to be a little bit tight, you want to open up a credit card for the time being to kind of float your cash reserves there for a little bit. That's a big no-no. Don't go out and finance a new car or vehicle or anything like that. Whatever you do, just be sure to consult your mortgage lender ahead of time to make sure that it will not mess anything up with your home purchase.
Yeah, I mean, if you can avoid it at all, sorry, Joe. If you can avoid doing that at all, do it. But if you can't, if something comes up and you have to, just make sure that you call your lender about it. Don't be scared to talk to them about it because you want to figure that out. You want to try to get it figured out, get it handled before it's too late.
Honesty is the best policy.
That's right. That's it.
Awesome. Okay, so I've heard some about large deposits of cash. Why don't if I make a fat stack next week and I want to buy a house, don't put that in cash in my account?
No, so cash has to season in your bank account. So basically we have to be able to source where money came from on every deposit in your bank account. Certain loan programs are not as stringent as others, but most of the time, if it's over 1% of the purchase price, we have to source that deposit. So if you have a large cash deposit, say $10,000 that goes in your account, we have to be able to prove where that came from. If it's just raw cash, we can't prove. So that money has to sit in your account for 60 days, let it season, and then we can use the money. But that's, usually your contract is within 30 days of when you went under contract to close. So that's not a long enough time to let the money season. Yep.
Okay. So here's another, that's a good point right there. You can't source where the money's coming from. So therefore it's tough to use. You can't use it as a down payment.
Yeah.
Okay. Here's another scenario for you. I'm employed with a company, but I've got an opportunity to be promoted within my company. I'm going to be they're going to be reducing my salary, but I'm going to be getting paid a lot more in commissions.
Yep.
Is that something that I can do? I'm going to be getting paid a lot more money.
Yeah, so if you're going to a commission style income mostly, you need to have a 2-year history of that. At least 12 months. Sometimes you can work with it with 12 months if you had a little bit of commission history before. But if you're going to a largely commission job, then you need to have a good history of that. So if you're in the middle of the mortgage process, try to wait until, if you're already approved, try to wait until after you buy the house and then switch to that commission style job. But don't do it during the process because that can really.
So, and that goes for any job status change. I would recommend consulting the mortgage lender.
Yes. Anything, obviously if you're taking a higher salary, good deal. That's awesome. That doesn't really.
I still recommend
consulting.
Still
talk to your guy. But, that's a great thing. So don't be scared to do that. But if it's going to commission, if you're going to like a lot of tip income or something like that, anything that's a variable income, make sure you talk to your lender before you take that job, especially if you're already pre-approved and you're out shopping. Don't take a new job like that because then you may not be pre-approved anymore. You may have to wait. So you may be able to push that, that income up.
And that even if you're switching from one company to another, that's a big thing. You still want to.
Yeah. You still want to make sure that that's properly documented. Most of the time, you'll be okay if it's you're going from salary to salary or hourly to hourly. You may just need to get a new pay stub before you close on the house. So a lot of times there's a workaround, but you have to let your lender know. You can't just hide it and hope that it doesn't come up. You have to talk about it. You have to know, your lender has to know what's going on, especially if you're under contract, because that can really, you can really ruin the whole thing and end up losing your earnest money if you don't be honest with everybody.
Okay. Once again, guys, if you have any questions, be sure to comment them so we can get them answered. Even if you're watching on replay, be sure to comment. Let us know what questions you have or any topic suggestions for following weeks. Any feedback is appreciated. And be sure to comment. Let us know that you're here. Say good morning to us. We appreciate you being here. Can't see that you're watching, so be sure to comment to let us know that you're here. Susan Roby has a question. What are rates right now?
So right now rates are hanging like in the low threes, 3.2, 3.3.
For conventional?
For a conventional 30-year loan with great credit. So our rates are really good right now. They're still historically low. Mm-hmm. They're not as low as they were 2 months ago. 2 months ago, we were in the twos.
We had a real treat.
Yeah, we had a really nice little probably 3-month period there where rates were extremely low, artificially low. And right now, they're kind of back to where they really need to be.
Help stabilize things a little bit.
Yeah, rates are stable right now. They're back. They were kind of unstable for a few weeks. They were raising really fast, and everybody was kind of freaking out, worried that they were going to go way up. But they've kind of stable, down in those low threes. So it's still a really good time. Don't be scared to refinance or buy. All that stuff is still really, really lucrative right now.
Awesome. Candace, really appreciate you tuning in this morning. Thanks for being here. Okay, so let's see. The one thing you mentioned earlier, and I see here in your notes, is you want to make sure you do all your shopping. Like shopping for a mortgage lender, I mean, it's good.
Yeah,
I feel like you owe that to yourself.
Yeah, definitely.
See what options are out there. You need to see who you get along good with. You need to see where other people's rates are at. Yeah. Because relationship and communication is important in this process. But you want to make sure that you do that up front. Why don't you want to shop after you've already gone under contract?
Yeah, so once you go under contract, that's when time becomes really, crunched. So you have to be able to order your appraisal. You have to be able to get your title work ordered. All that stuff has to be done in a timely manner. So if you haven't done that yet and you're trying to shop around, if you're talking to other lenders, they may take 2 or 3 days to get you a quote, and then you've lost 2 or 3 days on your contract.
That doesn't happen with the Jonah Abraham team.
That doesn't happen here, but it will happen with other places. If you call Rocket Mortgage or Quicken
let's
Loans,
not say any
of those loans, any of those online lenders, you call them, you're probably going to wait 2 or 3 days to get a quote. And then also, you just never know that you're getting the actual numbers that you're going to end up with. So it's good to have, somebody that you can trust, somebody that your realtor trusts, and then take it from there.
Okay. Yeah. I mean, it's who you work with matters, and making sure that the mortgage process, especially because that's the most important part in the home buying process.
No doubt. Yep.
If you can't get the financing, unless you're paying cash, but if you can't get the financing, then you're not getting the house. You can look at any house you want to, and you won't get the house.
Yep.
So we got a couple of questions in here. Christina asks, what's the difference between closing costs and down payment?
Yeah. So your down payment is your initial investment up front on the loan. Mm-hmm. So you can go down to 3% on a conventional loan. There's even some zero down programs out there. Right now, I'm trying to push everybody to a conventional loan just because that's what the market is requiring. If you want to be competitive, you need to be in a conventional loan. So first-time home buyers can do down to 3%. Second-time home buyers or repeat home buyers, 5%. Mm-hmm. So, but your down payment is your initial investment on the loan. Your closing costs include your lender fees, your attorney fees, your escrows. All that stuff is included in your closing costs. So your closing costs generally run about 3% of the purchase price, and your down payment will be 3, 5, whatever percentage you.
Okay, so what are going to be included in your closing costs? Because that's not agent. That's not a lot of buyers get confused when you're buying a home. More often than not, I know I've never had a buyer pay me any commission. The seller is responsible for paying commissions. So your closing costs, those are going to be all your lender fees. Yep. Attorney fees, all your prepaid items such as your homeowner's insurance, property taxes that gets escrowed, any HOA initiation fees, all that kind of stuff. That's what's going to be included in your closing cost, which is aside from your down payment.
Correct.
So, and again, no commissions are in there. That's all paid for by the seller. Seller pays the commissions. Buyer oftentimes pays for the closing costs. However, you can negotiate that.
Yeah, especially in a market like this, everyone needs to be prepared. You're most likely going to have to pay all the closing costs on your own, and you're going to pay your down payment as well.
There's ways that we can work around that.
Yeah, there's ways to negotiate it, but just mostly in the market. Yep.
Okay. Tara has a question for us. So Tara wants to know if refinancing a car would lower my monthly payments. Should I go ahead before I try to purchase a new home?
I would talk to a lender first, get them to pull your credit, look at the numbers, see if refinancing the car will be beneficial. if it helps your debt to income ratio, say your car payment is lowering by $200 a month, that can really help your debt to income ratio. And it can help you qualify for more house. So yes, I would say that's a good idea, but definitely talk to a lender about it first before you go forward with that, because it may just slow you down and it may not really help you.
And definitely don't do it during the process once you're under contract.
Yeah, definitely do not do. Basically, if you can avoid doing anything with your credit once you're under contract, do that.
That's best. Once again, guys, if you have any questions, be sure to comment. I really appreciate all the questions that are coming in. Even if you're watching on replay, be sure to ask any questions that you have, and we will be sure to get them answered. Please comment. Let us know that you're here watching, because we appreciate you being here. And let's see, we've got a couple more questions. Candace asks, I really like this question right here, because this applies to somebody like myself. If you're self-employed, what types of info do you need to be financed? This is a great question, because obviously self-employment, a lot of self-employed people try to adjust things with the taxes that they show. They try to, I guess, write off your income, which affects essentially the income that you show, which when you're buying a home, they go off of the income that you report to the IRS. So what kind of info would you need on that?
So pretty much the IRS guidelines and the mortgage guidelines work hand in hand. So if you don't pay your taxes, you're probably not going to be able to buy a house. So you need 2 years tax returns on if you've opened a business, if you're a 1099 employee, you need 2 years tax returns on your self-employment income. And then what we can do is we average that over 24 months. We're going to take what you show as your adjusted gross income. So after your write-offs, we're going to look at that and we're going to average that over 24 months. And then that's what we're going to use to qualify you. And then also right now, when COVID hit, they changed the guidelines a little bit. Now we have to do what's called a profit and loss for each business. And we have to be able to prove that the business is actually making money right now. Back before COVID, you didn't really have to prove that the business was making money. You just had to show that you had income on your tax returns. Now we have to take the bank statements. We have to prove that there's actually income coming in on the business.
The mortgage process is extremely fun right now if you are self-employed.
Yeah, it makes it a little bit more tough, but if you have a good loan officer, it's really not that bad. Joe did a few loans with me, and he said it was the easiest loan he ever got. So yeah, it's definitely not bad if you have somebody that knows what they're doing.
Awesome. So that's really good. Christina's got another question. She asked, why does a conventional loan look better than an FHA, USDA loan to sellers right now? And I think that's a question really that I can answer with me being a realtor. Let's say I'm representing the seller. So FHA and USDA loans, VA loans, they're all government-backed programs. So a conventional loan is not a government-backed program. So the reason why conventional looks a little bit better is because the government-backed programs are going to be a little bit more strict on the guidelines. So the appraisers will be a little bit more strict. So they're not only going out there to appraise the value of the property, but they're also going out there to check for any safety concerns. So making sure any tree limbs aren't within a certain measurement from the roof line of the house, or making sure there's handrails on every staircase, or making sure that there's not a significant amount of wood rot on the house. So there's always that chance that the appraiser could go out there to appraise the value of the house and then also come back with additional repairs that the seller has to do in order for the loan to even go through. And when you combine that with the fact that the appraisal contingencies go and those government-backed loan times go all the way up until the date of closing, you could be 2 days before closing and have the appraisal come back and say, hey, we have to get these items addressed before we can even fund the loan. And at that point, you may be already packed up in your house, maybe even moved out of your house already. Yeah. So it's just a little bit more risk for the seller. Not that FHA loans or USDA loans or any government-backed loan is a bad option, but a lot of times if these sellers do have the conventional option or cash option, they're going to choose that option before they go with the government-backed program. So, but we're still getting people in homes with those government-backed programs every single day. So I don't want you guys to get discouraged about that, because we will make things happen for you. Whatever your situation is, if you can qualify to buy a house, we will get you in the house. Okay. Garrett gave us a comment. He said, these two guys got me in my first home at the age of 22. That's pretty impressive. That was 2 years ago now, G. And we've been talking about Garrett. That was a great purchase for Garrett. So he bought at a great time. and now we're getting ready to sell that house and help him buy another one. He's got a lot of equity in that thing 2 years
awesome.
later. Yeah.
Yeah.
Yeah. So that was a great purchase. He said, he says he's about to sell that one with another. Yeah. So Gary, really appreciate the referrals you give me. Really appreciate the good word that you put out about me there. So guys, any more questions, please let us know last minute. We'll be sure to get them answered. And if you're watching on replay, be sure to comment. Let us know that you're here watching. And even if you have any questions, let us know. We will get them answered. Any topic suggestions for coming weeks? I would love that. Any feedback is appreciated. And once again, thank you guys for tuning in for another episode of A Cup with Joe. If you would like a mug or a t-shirt, please let me know and we will get that to you. Jonah, I really appreciate you being here this morning.
No problem.
Always great doing business with you.
Yep.
Whenever a loan's going to you, I know it's getting closed on time every time.
That's right.
So really appreciate your hard work on that. Thank you guys for being here for another episode of A Cup of Joe, live every Wednesday at 8 a.m. on Facebook, Instagram, and YouTube. I'll see you guys next week.